But here's the big bull, Rakesh Jhunjhunwala, exclusively on ET Now, and he believes that the Indian bull market, which started in 2001, is still very much intact, and we are witnessing just a correction in the middle of a massive bull run.
Mr. Jhunjhunwala, last time when I walked to your office, I saw this lovely quotation on one of the walls, which was from Sir John Templeton, which is, bull markets are always born on pessimism and they die on euphoria. Do you think we are reaching that level? There is too much of non-belief in the India story. No one wants to invest. Everyone is buying real estate, gold, silver.
See, Nikunj, I think the bull market which started in 2001 is still continuing. I think it's a correction within a bull market, right? And I agree with Naresh that not only in today's times, but even in times when equity seems very attractive, extremely attractive, you should diversify your asset class. Only I don't do it out of choice, right? But I have all my assets 103% in equity. But what I feel is that, see, my only point is, I don't think, my personal feeling is that India will give far greater returns, right, provided you have the patience. Because if I predict 15–16% earnings growth, right, how in the hell in a country which saves $700 billion today, which 6 years, 7 years later is going to be $1.5 trillion, you don't have $30 billion coming to the equity markets. You have a good market, you have good market regulation, perfect systems, you are setting up the institutions by which this money will go. So let me be frank that my bet on India is as much as a call on the earnings growth and the peace. But I don't think, and consistent earnings is what causes, consistent rise is what causes the euphoria. It's happened in India. A lot of people have studied behavioral science and all. I've not studied all that. But what I've read, it has told me it happens if there's consistent profitability, right, and there's underexposure. So I don't see India is going to peak out before 25 times forward earnings. I think so. That period may be a very small period of 1 year. But that's the time, that would be the time to encash. I know at that time I've seen कि शेयर बाजार में गधा घोड़ा बहुत जल्दी बनता है, घोड़ा गधा बहुत जल्दी बनता है.
On a 3-year basis, let's say if you're having this conversation after 3 years, where do you see Indian markets, where do you see Indian economy, and where do you see Indian stocks?
I can't say 3 years or 2 years.
5 years?
But I'm bullish, and I can't say 5 years.
Okay.
See, there could be a period, maybe where my portfolio will not perform a year, it may go down, right? But I'm confident that India will perform, and consequently my portfolio will perform. I have a large investment in Titan, I saw it go down from 1600 to 600. I never sold one share, right? A lot of people were saying that I myself was worried 1600 share, I have a very large investment, went to 600. I had the confidence, today it's 4400. Right, so I am confident that maybe for 1 year, 2 years, markets will not perform, so be it. But I can't, my personal expectation is that if I get an 18% return, I'm a good investor. If I get a 24% return, I'm a super investor. And I'm quite confident that I will get the 18% return. But I'll have to be patient. It's not going to be every year 18%, right? And there are going to be periods when you're going to feel disillusioned, you're going to feel, oh, what I got into, like if I would not bought a flat, or my wife, when the market falls too much, she tells me you should have bought gold. Why you bought all this equity, right? And sometimes I feel she's right here. Maybe I would have made more money if I had bought gold. But I think the equity will give me the return which I anticipate.
Consumer or consumption stocks or brand owners have been clear leaders in the last 2 years. Those who bought defensive, those who bought these brand companies, they've managed to make money. Do you think that trend will change now going forward? Because the lower end of the market, real estate, infra, that is trading at a deep discount to the Sensex valuations?
Well, I personally believe, and I never used to believe until 2–3 years ago, I think these defenses over a period of time will give the higher return. If you want to be a long-term investor. If I look at it from, say, if I hold on to my defensive for the next 10 years, and I don't sell, there could be periods of interim opportunity where I could buy the others. There could be a much faster ride in a period of one. So, I was just talking on a value investing conference in the afternoon, and to my mind, there are 2 types of investing. One is, I'm not betting on earnings and earnings growth, and I'm not betting on a business model. What I'm betting is on a valuation differential, right? So I buy that valuation differential, I hold it for a year or two and I sell it. One is where I bet on the business model, that there will be earnings growth, consistent earnings growth, quality, corporate governance, blah, blah, good management, everything. So I would classify these companies to be that first, because I also have large investments in the infrastructure sector. But now I've come to one conclusion, that where is the cash going to come from? Unless and until you reduce, the only way they can get cash is by reducing the working capital side, which I think they will be able to do after some time. But even after you reduce that, you know, there's such large capital needs.
Okay, that's the big bull, Rakesh Jhunjhunwala, saying this is just a blip in an otherwise bull market.